What's up, guys? My name is Tai Zen, and welcome to the cryptocurrency.market channel. This is a real-world trading and investing channel where we specialize in helping traders grow and manage a 7, 8, 9-figure portfolio in the cryptocurrency market. And in this video, guys, I want to talk about when our team is going to start buying crypto again. We just finished the 2021 bull market, right? And now the market has crashed, I think over 80%, somewhere around there, right? I said that we will start looking for opportunities to buy once the market falls below 60%, right? So it has fallen way below 60%. We're somewhere around the minus 80% area, okay? We got little bounces here and there, but in general, it's minus 80%. And I want to share with you guys that there has been multiple bull markets in the crypto world, in the crypto market, okay? Some people think that the bull market started in 2014, 2017, and 2021, but the reality is there was many bull markets in crypto before 2014. The reason why it's hard for you guys to see that or know that is because there is not a lot of data going back that far, but I have seen the data where it goes back, and you also got to look at before 2014, the crypto market was made entirely of Bitcoin and nothing else. Okay, there's a few altcoins here and there, but the percentage of the market share was so small, it's not even worth talking about. The entire market share of Bitcoin was 99.99999% Bitcoin. So because of that, before 2014, you have to look at the Bitcoin market to account for to see what the entire crypto market looks like. And if you look at the Bitcoin market, there has been many times when Bitcoin shot up and then it fell down, okay? So we tracked all the bull markets since the beginning when people first started trading Bitcoin. Bitcoin was invented in 2009, and then it first started, it was first publicly traded on Mt. Gox in 2010. The price opened at somewhere around 5 cents per Bitcoin, but the reality is it's probably going to be around 8 cents or 10 cents for you to get the actual Bitcoin, okay? It's the way that Bitcoin was traded back then. I don't think it was realistic for you to trade and get a lot of Bitcoins at 4 or 5 or 6 cents, okay? So, and then even at 10 cents, there was not a lot of volume there, okay? So it has crashed and fallen many times, and based on our analysis, the average drop or the average crash in all the bull markets is somewhere around the mid 80s, around 84, 85%. So basically we can expect that every bear market, we can plan for it to fall minus 84, 85%, somewhere around there, okay? We can round it off to minus 85%, just so it's easy to remember and talk about in this video. So since the bull market has fallen right now, we're in a bear market and it has fallen around 80% already, then we have never seen a situation since we got into crypto in 2013. We have never seen a situation where the market falls 80% and we buy in and we lose money. We have not seen a situation like that. Every time we go into the markets after it crashes 80% and we buy in, we have made a profit on it 2, 3, 4 years later, okay, each time. So what I'm saying is that right now, if you guys listen to me, right, it will sound that this is an ideal time to buy because the market has already fallen minus 80%. But before you buy, I want to share something with you guys, okay? Just because it falls 80% and the Taifu team has never lost money buying crypto after it falls 80%, that is not a signal to automatically jump in and start buying right away, okay? You have to look at the situation that you're in and your goals and the environment in which you are in before we can safely say that it's okay for you to buy in. And I'm going to give you guys several examples so that you know what I'm talking about. For example, if you live in a Western country where they tax you on crypto, then it is beneficial to you to hold the coin for 12 months or longer so you get the lowest tax rate. So for example, if you live in America right now, the highest tax rate for holding a coin less than 12 months, the highest tax rate is 20% plus the Obamacare tax, which is around 24%. Let's just round off to 25% so the math is easy, okay? So it's 25% if you hold the coin for less than 12 months. Now, if you hold the coin for more than 12 months, then, no, my bad, my mistake. I got the things mixed up. If you hold the coin for more than 12 months, then the tax is 24%, or round it off to 25%, okay? Now, if you hold it for less than 12 months, the highest tax rate is 37% plus the 4% Obamacare tax, which is around 41%. Okay, you can round it off to 40. So 40 plus 25%. Which one do you want to pay? So for me personally, if I was a U.S. resident, okay, or a U.S. tax resident, then I would aim to get the lowest tax rate, which is the long-term capital gains. And I would want to hold the coin for more than 12 months. So if the market starts falling right now and it's minus 80%, and let's just say that I have $100,000, I'm going to split it up into 10, 10, 10, 10, 10,000, 10,000, into 10 chunks. And every time there's a drop in the markets, I'm going to buy in 10,000. Every time there's another drop, I buy in 10,000. Drop, buy in another 10,000. Drop, buy in another 10,000. Okay? And then as the market goes back up, right, I'll start buying 10,000 on every little dip, 10,000 every dip. So now the average cost that I buy in will be somewhere around minus 75 to minus 85%. Somewhere around there. It's not perfect, but it's an average. And are we going to get, what happens if the market falls down to minus 90% or minus 95%? It won't matter, because as we average in, okay, the technical term for that on Wall Street is called dollar cost average, right? The street term that I use is, hey, buy a little bit at a time. Don't buy a big chunk at a time. Just divide the money that you have into smaller chunks in like 10 pieces, 12 pieces, 15 pieces. The number of chunks is not that important. What's important is you spread out the buying over a wide period so that the average cost, you're looking for the average cost, not the best price, but the average best price, okay? So if we do that now, if I was in the US, I would start looking, like if there's a dip, right, I would buy a little bit. There's another dip, I'd buy a little bit more. And what this allows me to do is to start holding my coins, because if the bull market goes back up in the next year, year and a half, 2 years, then those coins I hold will be eligible for the lowest tax rate. Now, since I'm in Vietnam and I'm not a US tax resident anymore, right, then my approach is a lot different, right? I know that in Vietnam, the tax law is that they don't recognize crypto as an asset, so they don't tax you on crypto yet, at the moment. In the next year, 2, 3 years, they may, but right now they don't. So what I do is, I'm going to wait until after, like towards the end of 2022, before I start buying in. The reason why I'm going to wait like that is because I believe that we might have, in case there's another dip down, right? I don't want to have to mentally sit through the mental stress of the market falling while I'm holding a position. Now, keep in mind also, guys, I want you guys to keep this in mind also. Each person has a different level of mental stress and pain threshold. For example, if your entire portfolio is $100,000 and you have a job that pays you $100,000 or $200,000 a year, that may not be very stressful to you for your $100,000 portfolio to drop to $50,000 or to $60,000 or to $70,000. But now, if you're managing a multi-million-dollar portfolio and it drops 20% or 30% or 40%, that's a lot of mental stress on you. Okay, so we're in different situations. Okay, or you need to consider the situation you're in. You might hear me say something, but you have to look at your personal situation and say, okay, what Ty is saying, yeah, that mentally I can do that with a $100,000 portfolio, but I cannot do that mentally with a $10 million portfolio or a $50 million portfolio. Okay, so you have to think about that and apply it towards your personal scenario. Okay, I can only share with you general strategies of what I do. If you guys want to learn more detail about what we do in exact situations, I highly recommend that you invest into our cryptocurrency investing blueprint. You can get a copy of it at www.cryptocurrency.market/blueprint and learn more about it there, okay? But in the meantime, right, I just consider you to really look at yours. So basically, to summarize this video, because they're starting to play the piano here, and I know it's getting loud in this video. If you live in a country where tax is an issue and the market has fallen minus 80%, you may consider start buying a little piece at a time for tax reasons, so that you are in the lowest tax bracket when you sell. If you are in a jurisdiction like Dubai, Portugal, St. Kitts, Singapore, Malaysia, Vietnam, where you are not taxed on crypto, right, or you are not taxed that much, then you have a little bit more room to wait another few weeks or another few months before you buy in, okay? So on our team, the guys on our team who are U.S. tax residents, they are looking like the next dip or so, they're going to start buying in a little bit. Me and the other guys on my team who are outside of the U.S., right, we're looking more towards, like right now is the middle of July, we're looking more towards the end of 2022 before we start buying in, okay? So I hope this video helps you guys out in having a better idea of when our team is looking to get back into crypto, to buy back in, depending upon which tax jurisdiction that we're in, okay? So thanks for watching this video. Make sure that you guys follow me on Twitter at HeyTaiZen. And if you guys want to learn more about the system and the process that we use to grow a 7, 8, 9-figure portfolio and manage it after we get there, you are welcome to check it out at www.cryptocurrency.market/blueprint. Thanks for watching this video, and I'll look forward to seeing you guys in a future video. Thank you.